Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys. Now as usual, let's take a look again on the gold market. Here situation stands a bit more simple than on the Forex, in euro currency in particular. So in general, everything that we said in a weekly report has been completed except the target. So target has not been reached yet, but the way how market challenged the resistance and the way how it behaved with the breakout, that's what we discussed in the weekly report. So indeed, market was forming minor consolidation that we discussed last week. It's taking the shape of the flag pattern. As market shows stubborn standing below some important resistance area, it always is a bullish sign. It means that market is building an energy for challenging the resistance. It doesn't guarantee that this will be definitely the successful breakout, but at least market will try to break it. So, and as soon as overbought area has moved slightly higher, so currently it stands around 1826. So market has got the chance to make this action. The confluence support area, resistance area that has been broken without any respect now has worked as a support. So things that we talked about as well. And now we're standing inside this consolidation, inside new range. So it means that if market will be able to stay there and will not drop out of it, it means that, it will get the chance to proceed higher and at least to the top of this consolidation and complete the target that we have around 1825, 1826 area. So that stands precisely with the agreement to this fib level cluster. So 1820, 1828. So on the 4-time frame chart, so you can see the flag pattern that we discussed has been broken. Now, with the pullback, so retracement currently is possible, but market has to stay inside the consolidation. So it means it's very easy to choose the support area where theoretically you could consider taking the long position if you haven't bought inside of the flag. That's probably pull back somewhere to the 795 area. So market could slightly return back, retest the previous top here, but standing inside of this new trading range. And then could theoretically start upward continuation. On the hourly chart, so you could see a few moments, first of all, of the target, 1825, this XOP. Second, take a look at market totally erased this downside collapse. I said that will be a very important point for the sentiment. And indeed, you can see with this upward action, market totally erased its previous sell-off. Grabbers that we discussed in the weekly report has been completed successfully because you could see the market dropped below these lows and just stopped downward action right at the bottom of the consolidation, not going lower to some fib levels. But as was also discussed, that it might happen. With this upward breakout, now we could consider only nearest standing fib levels as retracement targets. Most probably, as I said, this first fib level 795 area that led market to retest simultaneously the bottom on the 4-time frame chart, this support, and also previous top. It's also where it stands very close to minor consolidation here, sideways action. Market was standing in the recent couple of sessions. So retesting it, it might be a chance to take the position. The one thing that you should keep an eye on is that market should not return right back down in this consolidation and not break it down totally. In this case, it will be bearish. It will tell you that market wasn't able to stay inside of this range. And this will be not very good sign, especially when the flag has been broken up and if you will see that it's returned right back down and returned back inside of the flag, it will be bearish. So in this case, do not take any position. And in general, if you will see very fast drop here, just collapse, also avoid taking any long positions because here we need to see some very lazy gradual retracement, something of that sort. The actual market has to keep the same pace. So you can see the approximately harmonic swings here are forming the retracement mostly the same distance. And if it will be the same way in distance here, that will be relatively safe to buy. If you will see something of that sort, that will be the signal that it will be better to not take any position.